Good morning, everyone. Welcome to the room. As you know, trading futures involves risk and is not suitable for all investors. The information in the presentation is for educational purposes only, not a trade signal service, not intended to be financial advice. Hope everyone's doing well this morning. Thanks for tuning in to the room. We've got, well, let's pull up the calendar here. Overnight, we have made a new high. So yesterday's trading hours only high was a 36.50, and then the overnight we hit a 42. Now, I don't put a ton of weight on the overnight price action, but since we've gone to 42 in the overnight, it's more likely that we could go there intraday, but we really need to go there now during trading hours, hit that 42 to have it be, anything of substance. On the daily chart itself, I've got this retracement drawn from the previous one-day pullback to highs that had a pullback in that same day to the 50%, and then yesterday we touched the negative 23% target. And something like this, you don't know, it's going to be a draw until after the fact. You've got these, a day like this bouncing off of a level. It's hard to just grab a level and pull an anchor point when it's just a one-day pullback and it's not a continuation of another level. We did not pull back here prior to that to its 50%. So I'm not long daily on this 72.50, but I'm using that as a guide for now because as you can see, come on. If I zoom out, we are very far from our trend line, and we are very far from any recent retracement that has pulled back. So, more using the targets as a guide as opposed to using the 50% as an entry when we get up here in this type of market environment. Opening at highs from yesterday, and that means if we do get a pullback at all here, obviously to the upside, there's no resistance, there's nothing back here, it's just all open space. But as we move down, one thing that I would look at as a potential level for us to bounce off of is the 28.75 area. And that number comes from the market profile that I've been talking about lately in the videos. I've always used, I guess not always, but for the last 7 or 8 years have used market profile, and this is what it looks like. But it was just something that I didn't talk about a ton. So you've got these columns with letters that put together a profile at the end of the day. Every letter constitutes a 30-minute bar, 30 minutes of trade, and so we put the letters throughout the day, start stacking them, justifying them all the way to the left. So for yesterday, this is the first 30 minutes of trade. And then the second 30 minutes of trade overlapped a little bit, and then we continued higher. And so we end up with this profile where we can see, okay, where was a lot of the 70% of the volume, of 70% of the trading from yesterday? Where did that occur? It's between these levels. So now that we're opening up here above what's called the value area. Any move back down into or to the value area can then act as a little support level. So that's where I get that 28.28 area. And this is just in Excel. There's and it's in the member dashboard just below the login for the trading session. There's programs out there that compute it for you. I've just always done it myself and enjoy doing it myself. It helps me get some context for the day, sort of like the market internals. So opening at a balanced 1-to-1, but as we saw yesterday, that didn't last too long. We are yep, 2 ticks into new highs, and as we can see in the overnight, we have the short above us from highs to lows that traded. Then we came down and tested the long 3 times. 1, 2, 3. Then we bounced up to the short again, retested once, twice. Now we're getting a bounce, and as we break the 60-1/8 here, meaning as we break the 60-1/8 of the short, the overnight high to low, that now confirms that the long is in play. At least the long has enough momentum to come up and break the short. So we can pull that off, draw up the next retracement, and see if we get a pullback to the 35.50s. So when you get 2 setups like that, where you have a short setup and a long setup, both kind of opposing each other, I try to avoid the trade in the middle of the two, that chop and consolidation, waits for a break of the 60-1/8 of either direction, and then you can take the next setup in the trend. Now this morning, I like to wait the first 15 minutes out, the first 15 minutes of the day, to let things settle out, and then I'll start placing trades. Now for a market like the euro, that's not really applicable because trading hours only it doesn't really apply. I also like to look at yesterday's trade to today's trade without the overnight price action in. So after 5-10 minutes go by, I'll turn off the overnight, but it's helpful for me also to see, okay, what was the trend yesterday? We had 2 nice stair steps. The first one did not pull back all the way to the 50%. It was a couple ticks away. Second one pulled back right to it and had a nice bounce, and we are now up at that negative 60.18, meaning the market is very bullish. When we don't pull back all the way to the 50% like this, that's a sign that the market is bullish. There's buyers coming in well before the bears are able to push it down or take the market too far down. So what I was saying in yesterday evening's video is that I'm not going to fight any longs. I mean, the trend that we've seen is just relentlessly upwards. And so what I'm going to do is use trading hours only as a means to determine, are we in a sustainable downtrend, or is this just another little pullback to the next up move? And so I'm going to use trading hours only as my signal. So that just means using the low from the morning to whatever the high is. And when we break, after 30 minutes or an hour of trade, if we break the trading hours only long, because that really has not happened I'll just go to a 30-minute chart here. So like yesterday, for example, from lows to highs, that 61.8 is holding. It has not been broken. And as we continue on yesterday, 61.8 held and we trended higher. And then the same thing the day before, low into the high of the day, 61.8 held. We had the consolidation on last week, and we had a sign that, hey, maybe we could be getting some selling, and it broke right at the end of the day. But as soon as the market opened the next day, all we did was stay above it. Previous day, same thing. Even if you pull from the low down here to high, so you kind of get the idea. Using that 61.8 as the line in the sand. So essentially, what that does is gives us a day like last Tuesday as really the first opportunity for us to take a short. And whether you want to, draw up the previous day and just use the day itself. So, okay, Friday, low to high, didn't break. And then now all of a sudden on Tuesday, there is no low to high present at all. It's down, and we've broken the previous day's low, traded into Friday, broke Friday's low, and then subsequently had that bounce. But it's going to be a day like this that needs to happen before we get any sort of major correction, because those days that we have had have only lasted just the day. So we had one down day here, that was the last Tuesday, and then even the one the prior week only lasted a couple hours to the downside. So rather than try and call a top, it's going to be better to just kind of play things a little bit conservatively, at least to the short side. You want to continue to do what's working and stop doing what's not. So a good exercise is to go through and what's called 80-20 your business, 80-20 your trading. Ask yourself, what's working. And you can do this on Friday or over the weekend and say, okay, what worked last week? Well, let's see, taking longs worked. Taking retracements that pulled back right after we broke a high. So we traded into a new high, and then the market pulled back, and then we got a nice ripping rally. So kind of going through your notes, going through your trades, thinking back on the week, okay, what worked for me this week? And then ask yourself, okay, what didn't work? Well, I tried taking some shorts, let's say, and those didn't work. Fighting the trend wasn't working. Trying to pick a top, those sorts of things. And what do you want to focus on the next week? Well, try and focus on those, things that are working, and try to do less of the things that aren't working, and just make a couple of notes on a couple things you can do to continue doing the things that are working and stop doing the things that are not working. So here, when we get a situation that the market has pulled back but not all the way to the 50, I'll go ahead and raise. When it's this far away, it's okay to use the next high as the anchor point. If it's really close, let's say the market pulls back, one or two ticks away from the 50, then I'll leave my anchor point there and consider that, there wasn't an opportunity to get in, or maybe the price came down, touched your order, and you just didn't get filled, and that happens. And then I'll just leave the trade, leave the anchor points alone. But when we're 3, 4, 5 ticks away, it's all right to use the next high, and then I'll leave that there until we hit the target or pull back if I'm not in a trade, because then I can use the anchor point here at the 50 to highs as the next setup. And who knows, maybe today will be the day that we get the big sell-off and it ends up being the top. But I'm not going to try and call the top, because when we do get one day down, when the top does occur, or when the major pullback does occur, even if it's just to the trend line, it's not just going to be a one-day pullback. There's going to be 2, 3, 4, 5 days, and presumably some bigger body trending days to the downside that will have really good actionable trades that we can take part in. It is interesting that we have a very balanced breadth. Nothing really on the tape today. Friday we do have GDP, and then the usual new home sales Thursday, existing home sales on Wednesday. So now, because I have this drawn up, I'm following along in the first 15 minutes, even though I'm not placing trades. Now I can use the low to high, and then I'll be looking here at a 37.75 as the long, and that would essentially be the first trade on the day. And a lot of times in these kind of run-ups, there's just not very many opportunities to get in. That's why the market, just keeps running higher and running with fewer and fewer participants. So now it's a 38 because it's an even number. The 50% itself is an even number. You can just round up. So 37.75 and just take it up. And then if we keep going higher, then I'll move my anchor point as long as we're in this, ballpark of the negative 23. But as I sort of anticipated here, once we start screaming and going through the 61.8, then it becomes the pullback itself is not as deep. The pullback itself is just barely past the negative 23, so it becomes riskier and riskier. It is possible the option of, so like here as we made this little pullback and rally, buying above, if this was 30 minutes into the day, using a buy stop 1 tick above highs when we have all this open space above us, that's that can be a valid trade. Yesterday we were seeing high ticks that, just like today, you get kind of a high tick and then a minute later or a minute before you get a high in price not lining up exactly. That's typically a sign that we're trending or going to continue to trend, when get a high tick and then boom, get a high price, and then it's just constantly the ticks are going higher and the price is going higher, as opposed to just high tick, high price, and then getting that reversal. But again, not going to try and call a top. And if I don't get in any trades, that's just how it goes. While we're sitting on this, let's take a look at the NASDAQ, see if there's any better opportunities. Looks pretty much the same today. And you can just see low to high, pull back, and then boom, blow through the 61.8. No pullback yet. YM not quite as strong, more moving sideways. Could get some kind of pullback. Or, the market can make a little bit deeper pullback. Make a trading hours only retracement, and then have a little bit lower risk entry into some longs. Even these 2-candle, 3-candle, little 1-candle pullbacks, it did not get, those aren't even getting a full retracement. Yes, screaming. It's a little bit interesting that the VIX has rallied what was last week as the market continued into new highs, a couple ticks into new highs, and then the VIX really had a decent spike above the swing high. These kind of stocks like Home Depot just are on a tear, especially when the VIX is low. Swing trades can really last a long time. I'm not a huge fan of taking 50% that are off of an extension. As I just drew here, I went from highs to highs in a situation where we're not getting a pullback to the 50. I'd use it more of a guide when we break out of the 61.8 just to kind of see a potential pullback point. Again, high price and then high tick coming just a minute later. So not really, lining up. High tick, high price. We did just break a little swing low here. So that's at least a healthy sign that we can get some undulation, and we might be able to, get a little bit deeper pullback and then take a long on a break of a swing high then. So sometimes it's just a matter of being patient, letting some of the structure set up here in the first half hour if the market's not giving you any setups, as opposed to, you try and chase and you try and, okay, here's a little 1-tick pullback and the market is, this setup is like 3 ticks wide, and it's 2 ticks off of highs. I mean, the reward to risk is just not there. Sure, you can find a low, find a high, and draw a little setup, but you gotta be thinking in terms of reward to risk. Are you really protecting yourself other than by having a stop? Is that really the best use of your time? Best use of that particular bullet? Yesterday the pullbacks were a little bit deeper. We traded at the 50s before getting that run. Today we traded once and then have not gotten it. NASDAQ hit a little bit wider. ES making a deeper pullback, which will be helpful. Not a huge range yet on the morning, so even, okay, so this is our trading hours only. I'd like to see a trading hours only of an hour or so versus just 20 minutes, and the range about 8 points, so not terribly small. Dow making a correction all the way down to its opening price, just off its low. So again, that what do we have here? $28.75s. Looking at that support, that's all the way down here. So you can see if you just try and rather than just going right to the full halfway back, looking at the most recent long, and then when that breaks, drawing the full halfway back, if you start to draw every single anchor point, every single swing low, and try to take every long in that run down, it just kind of blows right through. And that's the same thing with shorts lately. Trying to take every single short that looks like a little pullback, you get the same thing running through you to the upside. So far today starting to look a little bit different. bearish engulfing pattern off of the first candle. Maybe our pullback day came quicker than we think. Here we have a low tick that does line up with lows. I'm going to draw up the retracement short. Let it trade because it's the first one. I'm going to let it trade and see if we get a little pause at the 50, maybe some undulation, and be able to take a short off of that level. But if we touch and go and trade down to, if we just tag it, trade down to the target, then the next level is a go just as a limit order. But you can see how fast the trend has been to do these V reversals, straight down, straight up. And so there's no need to put all your eggs in market. Definitely giving some continued mixed signals here. We have a low ticket lows, and that could easily come down here and break lows and then cancel that. But we saw that last week too. There were these situations where you're getting some decent structure. We broke the swing low, and then we get this little pullback, or we have this low down here and we trade up at the 50, but we're getting highs that are not lining up with high ticks, a low that lines up with a low tick, and then failing that. Not saying that will for certainly be the case today, but still a challenging market, even though it seems like everything you buy goes up. Came right down to the 61.8, holding with a low tick, so $23,138 in the euro. The next retracement. Interesting first 30-minute candle. Definitely different than what we've been seeing. Just the practice of going through and identifying changes in trend, changes to the market. If you're looking at one market, there's a lot that can be gained from observing in real time. I mean, the idea is to be in this here for the long term. and not get overly excited about any one trade or any one day, or any one week for that matter. Because we have that low tick that lines up with lows, gotta wait for it to break. Started reading the book Peak Performance. It's a pretty good one. Relates to sports and business. Now that I've been a little bit less mobile due to my hip, I've been reading a little bit more which it's always great to read, whether it's trading related or not. I know you've heard me say that time and time again. There's a lot you can get from non-trading related books, and one of the first ideas in the Peak Performance book is how we need to stress our minds, stress our bodies, a little bit beyond what we're comfortable with, and then take that time to rest, just like an athlete would go out for a training ride or training workout, and then take some time to rest and recover. That's when the value is materialized. And so you might spend a week all day in front of the screen thinking really hard, but if you don't pull away from the screen and take that time to rest, you can really not reap the benefits that you're looking to achieve. Sometimes after a big body candle day, we break into highs slightly and then just sort of hover around the close of that big body candle, close open, of today. So this little long that I have drawn up is just from the afternoon low to this morning's high. Again, we have a low tick that lines up with lows. If we were to break the 61.8 of the short here, then it'd be going right back to look for longs. And the reason I did not take the short outright is because it's all we have is, if it's a small setup on the very, very small, taking the first setup on the 512 is beneficial. A lot of times the 61.8 is below the swing low or swing high, but in this case, all we have is, a break of lows. We broke trading hours only long, which is one of the first times we've done that. And so letting the short trade, and then either taking the second 15-minute, or had we not gotten that low ticket lows, taking a short off of the 15 prior to a break in lows is a valid setup. But when I see a low tick that lines up exactly at lows like we have here, then it's a sign that we could be putting in a temporary or a low, the low for the day, or at least a temporary low that might last an hour or so. And I try not to fight the market just because I think or I want the market to go one way. I try to do my best to trade what I see as opposed to trade what I want or think should happen. And that's just something that will develop in time. I know we're always in a hurry to get things done, hurry to get where we're going, hurry to acquire new skills. But if we just hurry through life, then we're kind of missing it, missing the point of things, missing the enjoyment. So rather than try and hurry my way through the trading day, try to be as methodical and thoughtful as possible. We all make mistakes, but if we're in a calm and collected state, our chance of making serious mistakes is a lot smaller. So now we have a long that failed. We have a short that failed. And we are moving sideways, kind of right at the open, so very cautious. Almost more of a widening formation than a consolidation. If we look back here from yesterday, tight candle, then the next candle has a little bit higher high, a little bit lower low. Next candle, higher high, lower low. So we're widening. That is a sign that the resumption may be, we may change trend, as opposed to a consolidation that gets tighter, is typically resumed by the previous trend. So we were trending up, we consolidated. It would be likely that we trend up following the breakout. But at this point, we do have some support down here at the 35.50 level. We do have a low ticket lows. But you can see by just having a couple, a little bit of context in the day, going into the day, it can help keep you out of trouble. Consider this little we call it a 15 or a little bit larger retracement as the first setup off of this bigger 50% from the swing low at yesterday afternoon to highs, pullback, target at 45.50s. This little long down here, not valid because the short traded first, meaning we traded off of lows, touched the short exactly, thus that negates the long. You can see how after we sold off, it's just gone into the first half of the morning. The trend looks completely different as soon as we broke trading hours only. The first break of trading hours only long, now things look quite a bit different with the shape and the frequency of candles. Red, green, red, green, red, green. I mean, just this kind of environment, very, very messy compared to what we just had. And so sometimes the best days are days where you have no trades and you can stay out of some of this. Yeah, you may pick up, you may get down here and take a tiny little long and get 2 points out of it. And then if you go and take a couple stop outs right after it, it doesn't do you any good. Stop outs themselves are not bad, but taking stop outs because you're trying to force something is not good. Or getting into a trade and then feeling like, well, it really should go up. I think it's going to go up, and I don't want to get stopped out of the trade, so I'm going to widen my stop. Very bad habit. That's almost as bad as, or just as bad as having the trade move a tick in your favor and moving the stop to break even. You're not giving it an opportunity to run. The flip side of widening your stop is you're giving it so much room that you have exceeded the calculated risk. NQ already back up at new highs on the morning. It broke its trading hours only, pulled back. ES pulling back now. So a 35.75 is the long from lows. Down here we got the low tick. Got a little bit of support. Not a lot, but could be forming a down channel. And this is just sort of the flag, the bull flag here, but if buyers can't step in up here, why would they step in higher up? Chasing is one thing, but it makes sense that if price moved lower, we broke lows on the day, that's a more appealing opportunity to someone who's not in to say, oh look, we've got this big pullback, so let me jump in down here. But when you stop and ask yourself, well, who's buying up at highs? Who's seeing that as a low risk entry point? Well, people who are trading off of emotions and reactions, just buying at highs because they feel like they're missing out. So the next thing to do is draw up the opposing, just to see, is there a reaction? Where's the 61.8 break? Give us some context. You can see an immediate initial reaction at the 50% low ticket lows. Doesn't mean that it's gonna be a rip and trade, but those are just things that I notice as a trade starts to take off. Because a lot of times a level that tests once, even if it's in one direction, like the short here, the short traded, and now at that same price, right around within a point, the long is trading. So a lot of times, that's kind of the core of support and resistance. Where there are traders present, there will likely be traders present when we return to that point. So trying to be active and involved in placing trades, taking risks at areas that there's been a lot of activity in the past you improve your odds, as opposed to just trying to take a long, up in this open space. We've never traded here before, so as we pull back, there's really not much support. So now we wait. NQ has made a new high, as I said earlier, bounced off of its retracement. Its pullback is a little bit different. I guess we didn't truly break lows of the day, but I don't like, yesterday on the ES. Let me adjust this. Looking at the patterns, okay, here we pulled back just about to the 50. So then the next trade, you can expect it to pull back just about to the 50 or near the 50 or right to the 50. Well, in the NASDAQ, we pulled back all the way below the 61.8. So then, taking the next setup from lows to highs, what is the trend? Well, the trend just previously was to, break through the 61.8 and trade almost all the way to lows. So this is a situation where I'd let the 50 trade and then take a long off of that level. And no two trades are ever going to be the same. So you just kind of have to make a decisive judgment, and then just you gotta manage the trade. If you feel like 10 minutes go by or 5 minutes and you're in the trade, and you look back and you say, oh, well, now with this new information, I wouldn't have taken that trade. Well, all you can do at that point is manage it. If you start thinking about kicking yourself or being frustrated, it's just going to detract from making good judgments going forward. So just like in business, it's better to make a lot of little decisions. Just make a decision and take a step forward. And you try something, not investing heavily. Put your foot in the water, see how warm it is. If it feels lukewarm, okay, maybe put your foot all the way in. If you see a shark coming, maybe you pull your foot out. And so rather than spend all this time thinking, researching, and then going all in on one idea after years and years of dreaming about it, I've found it a lot more successful in a lot of mentors that I've had and just great business people that I follow. The path seems to be much more successful when you take smaller bites. Take a step over here. Oh, where is this path leading? And kind of follow it. And then if you're constantly asking yourself, what's working, what's not working? You've got a portfolio of stocks. Okay, what's working, what's not working? Get rid of the ones that aren't working and stick with the ones that are. What's working here in the ES? Longs are working, shorts are not. So stick with longs until they stop working. Or at least not try and aggressively pick a top because that has not been working. So I also read Mark Cuban's book, which Mark's an interesting guy. He's a little bit rougher around the edges, I guess. It's an easy read, but there's definitely a little more personal life in his books and his blog posts and things like that. Gonna draw up the short. We've got a 35 even as the low. So at this point, you've got 35.75 as the long entry. You got a quality target, up at 40.25, we'll call it, for a first target. So to move your stop from a -6 at a 34.25, which is below the 61.8, to move it, is it worth moving it up 2 ticks? If the market comes down and trades in a tick or two here below us, is it worth risking? You're basically risking those 2 ticks to make 4 or 5 points. So in my opinion, it's not worth tightening your stop yet until you break out of that anchor high. Sometimes on big setups like this, if this forms a low here and we break out of this high and maybe we stop right at the highs, double top or something like that, I'd move my stop up. But at this point, just going to leave it alone. You got to be comfortable with your full stop out before you go into a trade. And a lot of the time, if you're not comfortable with that, or if you're comfortable with the stop size but you're trading too many shares, well then that fear of, oh no, I can't have a full stop out, I can't handle that, or my account can't handle that, then you need to scale back. And that's why I always encourage people, when you're, if you're learning something new or going back in a sort of a restructuring phase, take out the distractions by moving to sim, and then you'll typically trade a lot better. Now, one tick move higher, I'm not gonna move my stop up here either. Now you can see a little bit clearer. Now we've got a tightening formation. So we had a widening from yesterday evening into this morning, made the high, had a couple bars of selling, pulled back to this 50%. Now we're tightening, and so you get this diamond pattern where, you know, traders start to take things higher, and then a little bit of fear sets in, some stops get taken out. And a lot of these stops getting taken out isn't necessarily the fear at all. It's just the mechanical stops getting taken out from all the people who were long on the run up here. A little bit more buying comes in, pushes the market higher. Some of those people who were long and then didn't have a stop and were panicking down here and said, okay, I'm going to hang on. And now the market came back up and took them and now made them whole in this area. Well, now they're the ones who, okay, I'm back to break even. I'm going to get out. Now they get out of the trade. That makes this little sell-off run down. And then they, you know, and then the chasing starts again. Some more, you know, buying from the professionals down here at the 50%. Market starts to move higher. Now those traders who were long, who took heat on the trade, got out of the trade for break even or for a loss, are now saying, oh no, I need to get back in the trade. And so then they start chasing, and then that's what ends up pushing this market up. So now that we broke the anchor point high by a tick, you can take your stop and move it up underneath this swing low here. And just by rounding down the 36.50s, and I realize that's the 50% here, but that is the 50. That is the swing low, one tick below swing lows. You could use 2 ticks. I have used 2 in the past, but in the last 3 or 4 years, you know, 1 tick below lows is, especially on the futures market, it's a pretty reliable breaking point. So now we've got a situation where, you know, I'd basically consider that break even. I've got stop at 36.50s, entry point at 35.75s. So, you know, that's as much a break even as being at the zero, in my opinion. And you know, so the risk has been taken out of the trade, but at a level to where if we break below lows, you know, that's essentially a sign that, okay, the market's changing direction. We've broken the swing low. If the market can't hold itself up here, now we have, you know, where is the failure point? Where would the market have to go in order to tell me that my trade is wrong? I need to be out. And that's where you want to place your stops. You know, when you're swing trading, it's the same thing. The market comes down and breaks a swing low, I want to be out of the trade. So, you know, that's how I know where I'm wrong. That's where I want to place my stop. So first target, 40, we'll call it 40 and a quarter, 28.40 and a quarter. So if you have 2 contracts, the first one I just take off at that negative 23, at 40 and a quarter. And if you have another one, then you can just keep trailing these swings on the way up. And the idea is to trail as long as possible. We want to place this one trade, stay in it for an hour, and just keep trailing all the way up. But at the same time, we want to, you know, lock in our profits on the way up, and we don't want to be too greedy. So using that reasonable target of a little bit past highs is where I like to, you know, set my first profit target. So we got a couple more ticks to go, and you know, if it comes down and stops us out, oh well, you had an opportunity. We took a stab. You know, if you don't ever place any trades, If you don't ever take any risks, well then you're not really playing the game. And there are times where I'll be more aggressive and take more risks and take more trades. And then there's markets where I'll be more conservative and take less trades. And right now it's kind of the latter because the risk is not the risk is higher to take longs, but those are the only trades that are working. I say it's higher because we're so high. Taking a long up near highs, like yesterday, getting long here, well, we were pretty close to breaking highs. We broke highs, we pulled back into just below highs, we set up into a nice long, and then the market took off. So trying to take one setup that's just below highs in anticipation of a break into new highs, and then just trying to stay in that trade so we don't have to keep putting on new risk. Putting on a new trade with a 6-tick stop, opening up your account to new risk is what, if we can avoid that, well, we can avoid it by just trying to stay in the trade as long as possible, having a little bit of patience. So what, the trade's up a couple of points and it pulls back another point or two. You got to ask yourself, are you willing to risk that point or two to make 4? And in the long run, you need to be able to risk that point or two to make 4 or 5, because to have an average winner of a 1.5 or 2 points and an average loser of a point to a 1.5, it's very, very hard to eke out any gains, not even factoring in commission and cost of doing business. But we need to be focusing on how can we make the numbers give us the best advantage. So we'll let this guy keep working. I'm not going to move my stop underneath this swing low until we break highs. That's the key. Got to let it break highs, or if it does double top, there are situations where I'll move my stop up. But in the meantime, if you get too aggressive, this pullback might only be one low in a little stair step lower, and then we come down a little bit, and then we move higher. But in most cases where we just make a pullback and break highs, yeah, you can kind of see, oh yeah, this is likely going to be the low here. But if you can remain patient, it's going to pay off. And since the NQ has been leading the ES today, meaning it made its high, pulled back, and then already made its new high before the ES and the YM, and look to that, and we can see that the NQ is just about at its negative 23% target. So YM not into new highs, and then the ES, ES not there yet either. Whoops. Come on. I like the hotkeys in toss, but it'd be nice if you could change them. I'll show you that here in a second. I'm just going to leave that off the chart. I guess I could draw up the next 50%, but a little bit cleaner. I'll just leave it alone like that. So target at 40 and a quarter. Stop sitting at 36.50s, and we wait. But if you go to up here at setup and then the application settings, over at the hotkeys are all the shortcuts to flip through the market, or the thinkorswim platform. But it'd be nice if you could add things like, there's a lot of times where I have a bunch of drawings on the chart and I just want to do like a control C or control something to just clear everything. And there's not really at least that I know of, a shortcut for that. These are the chart ones right here. There's pretty much the basic things, but like the time frame setup. If you just do Control T, that'll pull up the time frame box. Handy, but it'd be nice, like in Excel or in certain programs, you can add them and create new ones and things like that. You can see we're still above the 60-18 from lows to highs, so that's a good sign. And that 60-18 lines up with the lows back here. So once again, that stop placement, that would be, if I was not in a trade, where would I be looking to enter a potential short trade? Will it be on a break of a swing low? And so if I'm in a long trade, where do I want to put my stop? At the entry or at the signal break of the short trade. That's one way to think about it. So here is our developing profile. We have the first 30 minutes in the A column, and you can see how the B column, it is inside that first 30 minutes. So we have no move outside of that. Here's that support 28 to 28.25s. I usually find that 2 ticks above that is where we tend to get that bounce. We have the open space above us here. And so it's just kind of a helpful way to guide along. What do we got going on here? What is ESS? I had an extra S on my chart and nothing. I didn't think so. Looking at my chart and showing that I got the target hit, and looking at the chart and still showing down 38s. So 28.40 and a quarter is traded. So now, if you've got one contract, you kind of have to take it off at the target. At least if you're new to trading, it's very good practice to get out at the negative 23% target, in at the 50, out the target. You can still manage your stop on the way up by trailing it, so you can reduce your risk on the trade as you head to a target. But then after you have a little more experience, if I had one contract, would I do the negative 23% target or trail every single time? I think I would still do, and this is what I always tell people, just take it off at the target and move on to the next trade, because you need to get in that rhythm of getting in a trade, getting out of a trade, managing a trade, managing a trade to success, and then getting out. Sure, if it runs, well, hey, as you grow and as you can start adding contracts, all you have to do is to get to 2 contracts, and now you can take one off at the negative 23 and then trail the second. So now that we've broken the swing high again, the stop can be moved up underneath this next swing low at a 37.50s. Now we hit the target, can also draw the full retracement, and you can use a little bit of a judgment here if you don't want to move your stop up. So like in this case, 37.50s is basically just below the 50% of the next long setup. So you could just leave your stop alone instead of ask yourself again, is it worth moving my stop up 3 ticks to risk getting stopped out and missing out on a move of a break to new highs? So we already hit our first target. The next long, in this case, since it's a 15-minute, or it's a little bit bigger. You're crossing over a lot of this trade to get to the anchor point, and then we pull back to the 50, trade up to the negative 23. So you can say, well, I'm just going to leave my stop down here at 36.50s, just in case we come down and trade. Maybe we trade in a little bit. That leaves it below the 61.8. So that's totally valid, and in this case, that makes a lot of sense. So that's where the subjectivity comes into managing the trade, but the other factors, how to trail your stop, where to exit, those, as you can tell, are very mechanical. Getting some high ticks. Typically when we start trending again, that's sort of what you'll start to see. Not a high ticket high, but just high ticks at a price that is increasing, getting close to those 41.50 high. So we'll just kind of keep glancing at the NASDAQ and see if that can lead us. I'll draw up its next retracement. If you want to take that, that would be a 63.50s in the NASDAQ. Got some support up here. Now the NASDAQ already made its new high. So we're coming back to the previous high. So totally a valid setup. NASDAQ is leading the other two. YM not making it to a new high, just like the ES. So we wait. Couple ticks away from new highs. Here's our new high. So now we just follow along, trailing. If you've got 3 contracts, you can get a situation where when the market starts going straight up, you can trail each candle's low. Then you have that 3rd contract to trail swings with. But as you can see, the market would need to have to pull back. And so in the meantime, stop can go up. If you got 2, stop can go up to a 38.75. Here's a high ticket high. So trailing the low candle here at a 42.25. See, that's the highest candle. And then we've got these inside candles here. So if you still have 2 contracts left, put one down here at the 38.75, and then the second, a more aggressive stop up here at 42.25. Now because we were at the negative 61.8, and then it's just a matter of, if you get taken out up here, then you can trail the last one. Or if you're at 6, you do 222, whatever, however you want to break it out. But I like to trail my stop. Just put it below the candle's low. In this case, the candle that made the high price, the lowest of that. I'd rather move my stop up than just arbitrarily exit. So let the trail stop take me out, as opposed to just exiting the trade. So we do have a high ticket highs. So stop up at the next swing low at a 38.75, and we see if it holds. If you have 2, and you can start by trailing the swings, and then if we go, in a straight up run like this, we go about, 3 points straight up, then you can switch to trailing each candle's low and kind of get the best of both worlds. So, that's we'll call it a 36 up to a 43. Even if you only had 2 contracts, if the first is off at 40 and the second is off at 43 and you're in at 36, I mean, that's a decent move with very manageable risk of 3 points. So the first half hour has been the low of the day almost every single day in this run up. And we have that so far again this morning. So we will see what we get. So trailing my stop on the way up. If we break highs right here, then you can use this swing low and move it from down here at 39 up to what is currently what would be a 42. That's one tick below lows, but you got to break highs first. So some good stuff this morning, even though a little bit of chop and stuff that we stayed out of in here, but a good way to capitalize on the day. And as always, trailing your stop to get the most out of the trade. And if you can stay in another hour, do it. Here's the break. So now you get to move from 38.75 up to a 42 and just keep on trailing. So I think we'll leave it at that for today. If you have questions, feel free to shoot me an email. And if you can stay patient in the winning trades and adhere to your stops in the losing trades, then the profits, I can't say they'll exactly take care of themselves, but they will come if you are patient on the winning trades. I know a lot of traders are, getting out for just a couple of ticks down here after the entry because they're scared, or they move their stop to break even when it moves a couple of ticks in their favor. Instead of, you've got almost a 10-point trade here. And even with 2 contracts, that's a decent move. So wish everyone a good rest of your day, and we will talk to you soon.